Turning our attention to the financial sector and the risks posed by AI, please welcome the Chair of the U.S. Securities and Exchange Commission, Gary Gensler. Joining him is the Messenger's Deputy Business and Finance Editor, Dawn Kopecki.
Hi, Gary. Thank you for joining us.
Oh, it's so good to be with you, Dawn.
Yeah, it's great. It's been...
For those in the audience, don't know, Dawn used to cover me when I was in the Obama administration, and so it's great to be back together.
The Clinton administration.
Well, I wasn't going to go back.
It's been, not to date each other, but it has been a while. Again, you can tweet about this with the hashtag #MessengerAI, the Messenger AI. And wanted to start with some of the comments. You've been looking at AI for a long time, even when you weren't in the administration. You've called it the most transformative technology of this generation. Tell us how exactly it's being used today in banking and finance in ways that as a banking customer or brokerage customer, I might be interfacing with AI and not even realize it.
Oh, thank you. Yeah, I have said that. I got this opportunity about 6 years ago to go up to the small university in Cambridge, Massachusetts, MIT, and I was asked to come up.
Tiny one.
Just a small one.
Yeah.
I was asked to come up, and we were able to do that about the intersection of finance and technology. And I said, great, I'm glad to come up if I can come up full time, if I can teach, and if I could be around things broadly in technology. And AI then, 6 years ago, I thought was one of the most transformative things. Some people thought it was crypto. Right? I respect. You can have that debate if you wish. But to your question, artificial intelligence has been being used in finance already for years. Just think about this. If you take a check to an ATM and you put that check in, there's not a human on the other side reading it any longer. There's something called natural language processing, which has artificial intelligence. It's pattern recognition. Okay. Insurance companies are using it for claims processing. Big finance companies are using it to protect us, the public, in terms of whether there's credit card fraud and the like. They're using it for anti-money laundering compliance and the like. So there's a lot of processes that are already in place, and then you layer over it that investors, hedge funds, high-frequency trading shops, big investors are been using it as well to look for patterns.
So good things. But recently, CNN wrote a headline from March that read, AI can be racist, sexist, and creepy. And the father of our AI, Jeffrey Hinton, has warned that it has the potential to take over the world, that it has not the potential, but the very reality that it will at some point become self-aware. And just a few days ago, you told the Financial Times that it would be nearly unavoidable that AI would trigger a financial crisis in the next decade. And while you were at MIT, you speculated that there could be a financial crisis by 2027, just 4 years from now, or 2037, triggered by AI. So, not to go all Sarah Connor Terminator on you, but...
Didn't Linda Hamilton do a great job in that role? She really did.
But what are all the ways AI could go wrong in financial services? Some of the things you've been thinking about that keep you up at night?
I sleep really well at night, but I think of it on the micro level and the macro level. On the micro level, I think you're absolutely right that it can lead to bias, using AI to underwrite loans, insurance, and the like, because we as a society have biases in our society. It can come through the data. There's micro challenges about conflicts. We at the SEC put out a proposal this past summer with regard to the use of artificial intelligence and other covered technologies by robo-advisors, or you may call them investment advisors, and broker-dealers. So is there a conflict if you're optimizing for the investment advisor's interest ahead of your client. So these are important micro issues. But yes, I think there's some macro issues as well. And the macro issues is that there are natural economics that will lead to monocultures, that there'll be base data sets or base models. And large parts of the financial sector will be relying upon it.
Trading on it,
underwriting on it. Look, we've had a monoculture in FICO scores for decades. So this is not an unusual thing or novel thing, I'm saying. But if you take and you go from, and they were two data scientists, Fair and Isaac, who came out of Stanford 70 years ago, that led to the FICO scores. But if you take that and you put it into an AI model that's hard to explain, that may have biases, and many people are relying upon, you could see that you could have financial instability. If you have large parts of the market relying on one data set, on mortgage data, they could kind of, the herding effect drive us off of an inadvertent cliff.
Yeah, and they could, say, recommend trading a particular security based on where treasuries are, that everyone trades all at the same time, and then you have some sort of collapse of that security or market. Is that possible?
Yes.
Okay.
But see, right now, some of the folks in finance will say, listen, it's all fragmented and I'm not going to share my data. Why? I'm a big hedge fund or I'm a big bank. I'm not going to share my data with someone else. That generally happens early in a technology. But there are going to be data sets and there are going to be models. Just think of it this way. The various generative AI models, how many are there that you're talking about? If you want to think about it, how many big cloud providers are there? What, 3 dominant ones in the US? And so we're likely to end up, because of the network economics, 2, 3 of these dominant foundation or base models that largely everybody else is relying upon. It's a supply chain of AI, if you haven't thought about it. If you're a fintech startup, a community bank, a smaller asset manager, you can't build the big models. You've got to rely on somebody else's model.
You've got to buy it from someone else.
Well, it's the old, build versus rent.
Yeah. Well, let's talk about some of the things that SEC is doing right now to try to head off those things. You mentioned the regulation.
Well, I don't know if we can really head off. Let me say, on the micro level, we put out a proposal with regard to conflicts. We've gotten a lot of feedback. It's sort of straightforward concept. You've got to put your client's interest ahead of that of the firm, or are you putting in what's called the optimization function? Are you also optimizing on the investment advisor or broker-dealer?
Okay.
There's also about fraud. And let me just say, fraud is fraud. And there's a human that's using a model that's defrauding the public. That human, depending on the facts, is likely going to hear from us, right? It's the same thing there. But we are worried about faking the markets and fraud. On this macro issue, I think it's really needs a lot of discussion amongst not just financial regulators here, but around the globe.
Well, we're going to go to questions in a few minutes, so think of your questions. But when you talk about fraud, who do you prosecute? Let's say there's a rogue, creepy, sexist, racist AI that becomes self-aware and, steals $8 billion from a crypto exchange or something like that, or steals money.
You got a lot packed in there.
Let's say there's a rogue AI. Who do you prosecute? Who do you charge as the SEC?
Well, artificial intelligence as we know it now still has humans in the loop. So, I don't know when we get to, Sarah Connor's days.
Yes.
But there's humans that are putting that AI model in place and setting what's called the hyper parameters.
Okay.
And so there are still humans that have responsibility for that AI
So
model.
The programmers behind it.
Well, I don't know if it's the programmer. I didn't say that. The human. So
Okay.
But I do think that you raise important points that will at some point play out in the courts.
Okay.
But I do think that there are still individuals, humans behind these things, at least for now.
Okay. Now, what's next for the SEC? What's on your regulatory wish list for regulating AI since it is the holidays? What would you like?
Look, we're going to sort through the public comments on this predictive data analytics proposal that we made. That's about the conflicts of investment advisor, broker-dealer. That comment file just period closed in October. But also I look forward in 2024 collaborating with other financial regulators here in the US and around the globe about these macro issues.
A working group? Is a working group in the works?
Well, already the Financial Stability Board, which is an international group of regulators, has put this on their agenda for 2024. And I don't want to front run anything that Secretary Yellen does who leads the Financial Stability Oversight Council. But this is something that we're talking about amongst regulators.
Actively. Okay. We have time for a question or two. We have a mic runner to go. How about over here?
I can hear you. Just speak up.
So it seems like a lot of small companies that are starting these days, they're talking about AI a lot, regardless of their actual AI capabilities. That's also the case with large companies. Is the SEC considering any enforcement action in terms of companies misrepresenting their AI capabilities, or how widely they're using AI?
Don't do it. I don't. One shouldn't greenwash and one shouldn't AI wash. I don't know how else to say it. If you're raising money from the public, if you're offering and selling securities, you come under the securities laws, and give full, fair, and truthful disclosure, and then investors can decide. That's all I would say.
And you've already brought some enforcement actions already, I believe.
In terms of there are times in other spaces where people mislead the public, and it's the same set of basic law, but also the basic concept that you can sell a security, you can promote an opportunity, but fairly and accurately sort of describe the material risks.
Okay, one more question. How about here?
Hi, Chairman Gensler. Besides the conflicts proposed rule, are there any other specific initiatives that you're launching off the back of the executive order on AI? And how is the SEC structured internally? Do you feel like you're going to have the right people who can wrestle with sort of the technical aspects of AI as you move out on regulation?
The executive order didn't call for the Securities and Exchange Commission. We were not, specifically in there, but we are talking to our colleagues across the administration. I know the Commerce Department, for instance, has multiple things they're working on out of that, and the U.S. Department of Treasury and the like. In terms of the second, we've got a great staff at the SEC, 5,000 people. We use artificial intelligence already in some of our examination and enforcement and our economic work already. But in terms of policy, we talk to people using the technology, we talk to people in finance, market participants, and we put proposals out like we did on the predictive data analytics, and then we hear back from the public.
I think that's all we have time for. Thank you so much. Rep Beyer is going to be up next. Thank you all for listening.
Thank you so much.
Thank you, Gary.
Thanks, Dawn.